Hello again. Welcome back to the Money Corner. It's the beginning of a new year, and tonight I've got some guests who are very prominent in the securities business to talk to us about the new year, look back at the old year, and I'm going to try and get from them a sense of strategy. Where are they going, what are they doing, and what are they advising their friends, their clients, and themselves? What are they doing with their own money? I'd like to introduce you to first Walter Wulkan. Walter is a Jerseyite, a resident,
right.
I think, of Closter, Walter.
No, Harrington Park.
Harrington Park, okay. And Alan Rosenfeld. And Alan is probably from Long Island.
Yes.
Right.
Why do you mean probably? How can you tell?
Well, I was going to say Manhattan, and I thought probably...
He has a Long Island look
right,
about him.
Right. Alan, welcome to Jersey. Fellas, thanks
Thank
very
you.
much for coming here and being
Our
with me on
pleasure.
the Money Corner tonight. I said we're going to look ahead in 1987, but what was your experience, what were your feelings about 86? Good year for both of you, and did pretty much as expected?
86 was a good year. It was volatile. I mean, if I had to characterize it in any way, I would characterize it as very volatile. The first half, if I recall, was dramatic, super. The third quarter was generally abysmal, and the fourth quarter was sort of a wash. But even within those quarters, the volatility of individual stocks of the whole market was I think, very noteworthy.
I'm not
Phil,
sure.
we had-
Walter, hold on a minute, because I really have to introduce you two fellas properly. I'm not sure if we put the credits on the screen at the beginning of the program, but both gentlemen are associated with Grunthal and Company in New York City. And Grunthal, by the way, has a branch here in Jersey. You're in Paramus.
That's right.
And Grunthal is a fine little firm, an old firm with a lot of tradition. You have about 700 brokers, I believe, in your firm.
630, I think it is right now.
By way of title and by way of background, Alan essentially directs the area in Grunthal where they manage money, the money management division, and you call that what?
Sterling Advisors.
Sterling Advisors.
Right.
Sterling
And they are
people.
sterling.
Sterling people and managing money in a sterling way. And Walter has been in many areas of the securities industry for many, many years. Walter is now in charge of investment strategy
That is
for
right.
Grunthal and Company. And prior to that, he had a primary responsibility in research. Alan, I believe you had an extensive background in research as well, where you had a significant executive position with Beisch
That's
in
right.
research before coming to Grunthal in 1984. Because we didn't put your names and your titles on the character generator, I'm going to keep coming back with the credits throughout the half hour. Walter, I interrupted
pleasure.
you. Alan made a comment about 86.
Yeah, I was going to comment a little bit about 86. The first part of the year, as Alan said, was really gangbusters. It was a wonderful year, the first part, or at least the first quarter. By the time we got past April of 86, we saw an awful lot of internal deterioration in the market, which was not seen by the Dow Industrials. The Dow continued to stay pretty close to the high levels that it had achieved, but internally the market structure had weakened. We saw that really going along almost to the end of the year. And so between, let's say, May of 1986 and December of 86, we had a host of very happy people and a group of unhappy people. Those who were in the secondary stocks were unhappy.
Your observation leads me to a question, which is an observation at the same time. There's a possibility, as I listen to you talk, there's a possibility that, and what you're saying is we have kind of
A tiered market.
well, not only a tiered market, but a part of that foundation there is a little shaky, and there's some water in there, and I wonder if you have some apprehension based on what we've done in 86 about 87 in terms of the stability of stock prices
There were two.
or a possible downward bias.
Okay.
I'm not asking you to be bearish, by the way. I'm not trying to put words in your mouth.
I don't think you can get me to
Okay.
really be bearish, not just yet. Okay, there are two ways of looking at this. One is that you had a lot of washing out of secondary stocks in the 6 to 9 month period, that those stocks actually had a consolidation.
And what you're
But
getting
the
now,
wash came out of it.
and what you're
okay?
getting now is a big affinity or a big favoritism towards blue chip stocks.
But you have some participation among the better secondaries. And I think there are many people who are still looking at the secondaries as though they're totally dormant. That really isn't true. Today, for example, we had a good day in the over-the-counter market for the first
Yeah,
time.
fellas, both of you, you're going to have to help my audience understand what you're talking about, because the Money Corner's been on the air for a long time, or on camera for a long time. Many of our viewers are not market professionals, and jargon confuse people.
Okay.
Alan, Walter talks about secondary issues. Could you help
Okay.
us understand that?
Sure. Secondary issues are generally companies that are below the top tier in terms of quality and image.
Below the blue chip.
Yeah, an IBM is a blue chip, an American Telephone is a blue chip, a General Electric is a blue chip. But there's a large number of companies of good quality, but don't have the image.
Let's name 3 or 4,
Of,
by way of example.
Of secondaries that I
Yeah.
think are interesting?
Yeah.
Sure. Stock like Lumex, which is a relatively small
Oh, really?
company.
That's interesting.
I think that's an interesting little secondary company, and it has at least made believe that it's alive in this recent market. Company like Biorad would be considered a secondary. This is a supplier to the genetic industry.
Alan,
But there's a whole host of them.
I'm
Yeah,
skeptical
let me hear your
I think there's a
secondaries.
much bigger range
Yeah.
in between
Oh,
those two
absolutely.
categories.
Yeah,
absolutely.
such as what?
Well, a company that comes to mind, a stock we've been buying for our clients is Borman Foods, Borman Inc., I think it's now called. It's a supermarket in Detroit, the biggest supermarket in Detroit. But certainly, well below the blue chip quality. But
See, if I had to name a secondary, and it's interesting, I've been in the business 25 years. Walter, you've been in the business 25.
That's right.
25. Alan?
more than 25,
More than
even though I
25
look
years.
much younger than everybody.
By the way, for the viewer, we failed to have the names on the character generators, I assume. Is that right, Jeff? That we didn't get the business cards out. But my guests tonight are not without credentials. Here's the latest issue of Fortune magazine. Is that registering okay? And if you look in Fortune magazine, you'll see Grunthal and Company and the handsome picture of Alan Rosenfeld on there. Fortune had a very interesting issue about 2 months ago, I think it was, the 1987 Investor's Guide. And they asked several companies, Grunthal, Shearson, a couple other companies.
Thompson McKinnon.
Here's $100,000, create a portfolio. And Alan created the portfolio for Grunthal. It's a very interesting article. And by the way, I would recommend you reading this issue. I think it can be very helpful in terms of getting a strategy or a background for yourself. But continue with the secondary. Each of us are, I guess, veterans in the business. Collectively, we have 75 years of experience or more. Although we're not old, we're very young and vital, right?
Absolutely.
Okay.
Absolutely.
We tap dance, too. The point I was going to make, if you asked me to name secondaries, I would reach out for companies like Baxter Laboratory, even a North American Phillips.
I think so
No,
much
I
of this.
think they're better than secondary.
Yeah.
They're
but
more
less
up at the
than blue
blue
chip.
chip.
I would call
Yeah.
them red chips, if
Yeah.
there's such
Okay.
a,
Yeah.
a
All right.
term.
Yeah, and I would define a Borman almost as a red chip. It all depends on how you structure yourself.
Well, you can
in the
get in
market.
many things. You can get in the quality of the balance sheet. You can get in the assets.
Absolutely.
You can get
The
into the
long-term record of their
or
earnings.
Absolutely.
the productivity of research and development,
Sure.
or the amount of market penetration.
Phil, I think for the purposes of this discussion, really, the big, very well-known names, okay, I would consider the primaries or the blue chips, okay? Everybody
Dow Jones
knows
type
General
stocks.
Electric. Everybody knows an Eastman Kodak, okay? Below that, you get into a level of issues which are somewhat recognizable, but not as recognizable.
Okay, but let's bring this into practicality and help the viewer in terms of portfolio construction. Both of you now, as you look out in 1987, would you be inclined to be the blue chip buyer, the buyer of the Kodaks, the DuPonts, the American Telephone, or would your money go down to the lower tier? Would your money go down in the secondary or the smaller companies, less well known?
Alan, since you're my senior,
But-
I'll let you lead
Yeah.
off.
Thank you. We're typically buyers of high-quality stocks, maybe a notch, the blue chips as well as the notch below, the Baxter Travenols that you mentioned. Most of the money that we manage is managed for pension funds, endowment funds, charitable organizations of one sort or another, or well-to-do individuals. The objective that those people tell us, I mean, the investment objective generally is preservation of capital, reasonable growth, and lowering our quality guidelines would not be, would probably be doing them a disservice. And so our client mix mandates a high proportion of our investments being in the higher quality vehicles.
As far as I am concerned, my selections are, and always have been based really where we see value, or where I see value. If that happens to be a primary issue or a blue chip issue, that's fine. If it's a secondary, that's okay with me too. Now, I don't have all the same constraints that you do, Alan, but I would hate to categorize my selection based upon whether it's a blue chip, a red chip, or a secondary, or even a tertiary. If value exists, then I have an interest in the equity.
You know, it brings another point to bear, and I guess really what we're talking about is how we make decisions in terms of stock selection. And as I listen to you talk, I think back to 4 years ago when we were industry-oriented by the very nature of OPEC. OPEC forced us, we all had to get involved in the oil industry.
That's right.
Absolutely.
And when you think about it right now, although, as you know, I'm here to introduce Grunthal and let everybody know that Grunthal's here. I still work for that small firm called Merrill Lynch. So
They're
here. They're
still there?
They're in business, honest to God.
They're still in business?
I hope they are. I'll check tomorrow morning, see if the rent's been paid.
How do you like that, the competition?
Right. But now we think less of industries. Industries are not predominant
They're
in
still
our
a
mind
factor,
today.
yes.
Although I think in our own
They're still
firm
a
and
factor, though.
the research people I work with are very enamored now of the basic industries in the United States that might be a turnaround, the steels and the papers and the chemicals. So in that sense, I'm forced kind of into a group selection as opposed to company. Well, you go to the group and then you pick out the premier company in the group.
If you have an economic scenario that you're following, then industry selection will
trail along.
I think what has diverted some people like us from pursuing industries in '86 was the takeover game. I think because that permeated all industries.
And muddied the water.
That's right.
Absolutely.
And so people, there became an obsession to find the next takeover stock.
Well,
but even
we're really
in the
having to give
takeover
it take.
game,
Waller, you're my guest, but I'm the host, so I'm going to upstage you for a moment.
Go ahead.
One of the things I think you'll agree with me about the takeover business or OPEC and the oil, the speculator is always looking for the hot group or hot issue or hot game to hang his hat on. And I think that muddies the water for the professional frequently. Go ahead, Waller. I apologize for cutting in on you.
well, I think even in the takeover game, you had some industry considerations. We had takeovers, for example, in the food area. Okay.
Yeah, but weren't they usually
we had
asset plays?
Nabisco,
Weren't they
we
usually
had General
asset
Foods.
plays?
Yeah, but again, the conglomerates, some of the foods, the industries which lent themselves to an upward reevaluation of assets last year, okay, were really many of the equities that were in the takeover game. Not exclusively.
Yeah,
but
I understand.
what I'm saying is that even there you did have an industry selection. Now, when you spoke about your fledgling firm being interested in the cyclicals,
Yeah, very much so.
I don't think, I'll just tell you where we're coming from, or specifically where I'm coming from. I don't think that you can look at all cyclicals in the same way. And I think this is one of the things that Wall Street tends to do. They say, well, it's time for the cyclicals to move. Well, as you said, there are papers and there are steels and there are aluminums. If you said that the papers are of interest here, I would say yes, they certainly are, and they have been.
Yeah.
In '86 also. They did very well in '86. And the reason is that this is an industry that does not have too much excess capacity. They have had an ability to raise prices. They are not getting pounded by import
Foreign
competition.
Oh,
Okay,
yeah.
so there you can make a case for the cyclical
I
area.
think your analysis is very good.
Okay.
Yeah, you're quite right.
Well, maybe I can get a job.
Right.
But if you turn the table to the steel end, I think
Yeah.
you're talking a completely
Price
different
weakness.
horse.
Aluminum, the same way.
Aluminum the
people
same way.
can't raise prices.
Copper the same
Vast
Yeah,
excess
Exactly.
capacity.
Yeah.
So therefore, when the street talks about the cyclicals, I get worried. Yes, there are cyclical areas that are interesting. And as I say, I would go along with the papers, for example.
We've avoided the cyclical stocks in my area for years now. That was largely an economic assumption that the economy would grow very slowly and the excess capacity would not be absorbed and therefore very readily, and therefore prices couldn't be increased very easily. I can see where it becomes easier today to become more optimistic about the cyclicals. The weakness of the dollar certainly, I think, is a positive for the cyclicals. It's making foreign goods more expensive, American goods less expensive. But I still think it may be premature. I don't see the economy reviving with the vigor that's going to resuscitate the U.S. steel industry. And
I was not impressed yesterday in the budget message. I think the Reagan administration is projecting GNP a 2% increase. That doesn't sound very dynamic. That sounds almost flat.
Yeah, that's below trend, certainly, well below trend.
Well, if you're going to talk about GNP, I am one of those that has believed and continues to believe that we're going to have a very slow growth economy, at least through the first half of this year. I just don't see any way that we can have an explosive economy.
Well, let me hold you at that thought because I don't want you to disconnect. We're going to pause for a commercial now. I'll be back in just a moment with Walter Wulkan, who's in charge of investment strategy for Grunthal & Company, Alan Rosenfeld, who's in charge of money management for Grunthal & Company. Stay with us and hear these very interesting people in just a moment. Be right back. Thank you for staying with us. Let me reintroduce my guests. They're people who should be listened to, and you can profit from listening to them. Alan Rosenfeld is a veteran of Wall Street in many, many areas, been with major firms like DuPont. He's currently in charge of Sterling Investments, which is the money management arm of Grunthal & Company.
Sterling Advisors. Get the name
Excuse
right.
me, Sterling Advisors.
We don't care what you say, but get the name right.
The one thing you find in this world are critics. They're abundant. Sterling Advisors, the money management arm of Grunthal & Company, a good little brokerage firm with an office in Paramus, by the way, and Wulkan.
Too.
Roseland as well.
Roseland.
Verona, Roseland, everybody, Essex County gets into the act. Walter Wulkan is a friend of mine, a resident of Harrington Park. Alan comes to us from Long Island. Walter is a Jerseyite and a Bergen Countyite. And Walter has had extensive experience in executive positions and research. He currently is in charge of investment strategy for Grunthal & Company. Walter, just before we took our break, you were talking about we were all talking about the GNP being relatively flat. But I want to get us on to another track now. We've been talking about stock selection, which groups would do well, which industries would do well. What do both or either of you see as portfolio mix? We've got common stock, but more and more as people roll out of these high-yielding CDs, there's a fervor or desperation. How do we replace the income that's being lost?
That's exactly what we've seen in the last few trading days. People came back into the new year. The market started up. They looked at their cash positions and they said, my God, what do I do now? One of the reasons that we've had this extensive bull market, which really started, some 4 years ago, is because what we've seen is money getting squeezed out of the bond area, money being put on the table as a result of the cash tenders in the takeover game. And the net effect of this has been just to supply the fuel for an ongoing bull market. You asked me about mix now. Alan, do you want to take that or should I?
Go ahead.
What do you prefer? Number one, I would no longer go into long-term bonds in here.
You're afraid of interest rates flipping around now.
Not just yet. I think it's still a little early.
Would you
but
tell
I
us
think let's put it this way.
Would you give us the month and the week that they will flip around?
Only if you want the time and the minute.
When they ring the bell. They ring the bell.
Go ahead.
Okay.
Right.
No, I think the rationale is as follows. We have seen the bulk of the interest rate decline. Even if we get another discount rate cut, and the street started talking about it at the beginning of the year again, we don't know if that's coming. But even if we do, there just isn't enough left in the decline in rates to warrant assuming long-term bond
I agree with
positions.
that. However, I think in fairness to the viewer, we ought to point out that there's also a possibility of a long plateauing of rates as opposed to a reversal and a flip up. And I don't think enough people acknowledge the possibility of an ongoing plateauing, particularly with a GNP of minimal growth.
I wouldn't.
And a lot of excess capacity in the world.
I wouldn't argue that.
It's part of my
at
own
all.
scenario.
No, and it happens to be very similar to mine. I don't argue that. And if you notice, I said there isn't enough room on the downside. You see, the game that we had in the fixed income markets up to this year, really, was a combination game. We got beautiful total returns because we had appreciation in bond prices and we were getting wonderful yields. And in combination, those two outperformed the stock market in many cases.
Oh, sure. The long bond index outperformed
the long bond index
stock market.
outperformed the equity index. Now, I think that game is pretty well over. if you want to make a case that the interest level is going to stick around these levels, maybe even go a shade lower, because if we have a very slow economy going into February and March, then a discount rate cut is possible. One more. But you're so close to the end that I don't want to play the game. It's the old story. I forget who said it. You know, I don't want to buy them at the bottom, and I don't want to sell them at the top. Just give me the 80% in the middle. Well,
Bernard Baruch said that.
The 80, Bernard Baruch?
Yeah.
I thought I was
Yeah.
quoting myself.
No, it was
Can't win
Bernie.
'em all.
Bernie said I'll give away the bottom 20 and the top 20. I want the middle 60.
I'll take that 60
He was
in the
more
middle.
conservative than you.
Well, you see, I'm greedier than Bernie. At any rate, what I'm saying as far as bonds are concerned is that that big gravy train is behind us. And therefore, I would not be wanting to play that game.
Alan, go ahead.
We've been putting a lot of emphasis on what we foresee as beneficiaries of the tax law changes, the corporate tax changes. And, for example, retailers have come to the fore in our thinking. Traditionally, the retailers have paid full statutory tax rates, and they'll have substantial declines in their tax rates, and hence higher net earnings. Also, they'll be beneficiaries of increased consumer spending. The real beneficiaries of the latest tax change, I think, is the lower classes and the middle classes. So companies that serve that market, the Kmarts of the world or the Sears of the world, I think as retailers will do better.
If I were an auto dealer, I'd go out and buy a Hyundai franchise. That's really one of the things you're saying.
Could be, yeah.
Yeah, go ahead. I'm sorry.
And
I'll comment on that when you have a moment.
Okay.
I don't know how the Korean money relates to the American dollar. I don't know.
Hooked in.
But we have been looking at the whole impact of the tax law changes and trying to find areas that would benefit, and obviously find areas that might be hurt. And that's an argument, incidentally, against your earlier comment about the cyclicals.
Playing the cyclicals. Well, of course, there are so many reasons why and how people choose equities, but certainly there's a big school of thought on Wall Street. You buy those stocks that are out of favor and are really plateauing on low volume. And I know many people have been very, very successful.
Are you a technician?
No, I'm not. I'm not a technician, but I think there are many people who have been very successful if they have one ingredient, and that's a lot of patience. A lot of patience, you know. If you had the patience to wait for Gulf and Western and wait in the low teens, you ultimately got a magnificent rise. Same thing was true with RCA, but it took 5-6 years. And and by the way, that's one ingredient that most investors do not have. They want quick gratification.
Instant action. They want to be able to talk at a cocktail party about their latest stock that's tripled in the last 3 weeks.
Yeah.
And you're not going to do that, you know.
There's no question that patience is far more rewarding. But I'd like to comment on what you just said. I don't think that you can, on an omnibus basis, buy depressed issues and sit and wait and everything is going to be well with the world. If you are talking about industries that remain vital in this country, or companies that remain vital, but for one reason or another have not performed over the near term, then yes, you can buy depressed stock.
I just want
a Schlumberger, for example, is still a vital type of company.
I just want to, it's appropriate now, while you're talking, I'm not going to take you away from your trend of thought. In our vocabulary.
I think you already did.
No, hold it. I'm going to embellish. In our vocabulary now, we now have the phrase of sunrise industries and sunset industries.
Exactly.
Very interesting.
Exactly.
Go ahead.
And if it is, doesn't even have to be a sunrise, but as long as that industry is intrinsically a sound industry, that it has not left the country, for example, that the product has not been outmoded, okay, then yes, depressed issues can be of value and can be purchased. I just told you, Schlumberger, somewhere down the line, we will again have a problem with oil. We will again start drilling. And this is the premier company in the field, and yes, somewhere down the line, they will benefit. I am not convinced that you can have a major resurgence in steel. You can get a flip in steel only because of the consolidations that we're seeing, but not a long-term trend on the upside. simply because the metal isn't used as much. And there are other types of materials which are coming to the fore.
Oh, I think you're quite right, and it's kind of a cliche, but I think the three of us would hope that we would have had the wisdom in the early 1900s to recognize that the horse and buggy business was not a growth industry. That's essentially what
That's
you're
essentially
saying.
what I'm saying.
Yeah.
Sure.
Yeah.
Sure.
I agree with
That's
you.
what I'm saying, yeah.
On the other hand, there are investors, and this gets into a kind of a dialogue of investing techniques. There are investors who looked at Penn Central one day in bankruptcy and said, hey, there's a lot of real estate out
Yes.
there. And the iron on the railroad tracks isn't worth that much, but the yards are worth a great deal.
Perhaps we should be looking at U.S. Steel as an oil company.
Yeah, I was going to say, or look at them
Right.
as an oil, chemical, and metals company,
That's right.
and you get a different view. And I'm sure that's why, that's the way the man who had the big position from TWA.
Oh, you're talking about,
What a
you know, the
trying to
name
get
escapes me too?
trying to get a mental lapse. Three experts here who can't remember. We're not old. Oh, for crying out loud. The Raider, well, he's not a Raider. He's still
No.
has credibility.
No, it'll come to
Icon,
me.
Carl
Icon,
Icon.
Carl Icon.
Why did he take that kind of position? He took the position, by the way, at the price level where the stock is right now, and he bailed out around 28. So I do think there are different kinds of analysis that some professionals can engage in. I think for the average viewer that just has money to invest and not to lose, though, they're better off not playing these fancy games of trying to outguess markets. It can be very, very dangerous.
Couldn't agree with you more. All you're alluding to really is a whole field of investment, and this is what I said to you when we started this entire discussion, that I am not prejudiced whether it's a blue chip, red chip. This is where we started. I'm looking for value. Now, certainly Penn Central in bankruptcy represented tremendous,
Yeah.
Right.
tremendous value. No question about it.
Well, the essence
Do you
of
remember the Interstate deal?
you
Interstate
mean
department
Toys
stores.
R Us came out of
Little
it,
company
yeah.
was spun out of that called Toys R Us.
Or another example is Wix company right now,
Right.
which has made a
Okay.
remarkable recovery. And when you think about it, out of bankruptcy and making a tender offer for a multi-billion-dollar consumer division,
Two.
it's extraordinary.
They made two offers.
Just
Two offers,
One of which
yeah.
did
But
work.
I think that there's such a kernel of strength in what we're talking about because this really is the essence of Graham and Dodd when you think back to Graham.
No
Right.
question about it.
Absolutely.
No question about it. And that is exactly the reason that I keep coming back to value, and I don't care where the value exists.
Let me just elaborate on that reference. For those of you out there who want to learn a little more, if you go to the library and get Security Analysis by Graham and Dodd, they're the grandfathers of the investment theory, and it's a marvelous book to read, and it'll help you a great deal. We're right at the end of the program. Fellas, I really wish you'd come back again because we could talk a lot more, and I hope you've enjoyed being here. I hope
Certainly
you've
have.
enjoyed speaking
We
to
certainly
these two
have.
fellas. These are two real crusty Wall Street pros, and I thank you for being with me. I'll be back again on the Money Corner next week. Good night.